make it. We gon' 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 make it. Hey, what's up, people? Your boy Trader died tonight. On this Monday night, Memorial night. I decided to do a live stream tonight because it's Trader die all day long, baby. So all I do is trade. So yeah, we're gonna get into fundamental versus technical analysis tonight. Now, through my previous live streams, what have you, I did a couple examples of fundamentals like the earnings per share, reading the balance sheet, reading the financial statement, the price earning ratio, things like that. So you guys know like a tad bit about fundamental analysis. Now tonight I have a guest. My guest, his name is Sanchez. He's from the uh Unified Trading Institute. This guy's a good trader. He's actually a technical trader. I brought him on the show because he can give you guys insight for technical analysis. Because me myself, I'm a technical trader also, but I felt like it'd be better if you guys had a someone else's viewpoint that can talk about technical trading or what have you. So like before I bring him on again, we're gonna go like the difference between fundamental analysis and technical analysis. There's a few differences, but one of the main ones. I'm sorry, throw the screenshot. I apologize. All right. So as we see here, as you see with fundamental analysis and technical analysis, they both understand patterns in the company's financial performance, whereas technical understand patterns in the company's share price. So they both look for patterns, but they look in different areas for the patterns. Because basically, in all markets, stocks, forex, what have you will see continuous patterns. Just they, it's just that's how it is in the market. It's the same mindset they had in the 30s, 40s, 50s, 60s, 70s, 80s up until now. So that's why you see the same patterns because people still think the same. And it says, for fundamental analysis, they try to predict the future performance using financial statements. Whereas technical analysis, you assume historical patterns and share price would repeat in the future. So basically, technical analysis, you use the past to view the future or to predict the future. Whereas with the financial statements and fundamental analysis, you try to predict the future by looking at the actual financial information of the company. Because that's like we said, previous podcasts, previous shows, the fundamental analysis is you breaking it down to the fundamental, which is the basics of the company. So you're seeing the bare bones of the company. And this one here, I don't like saying this, but it's mostly true. Like fundamental analysis is really used for long-term investments. But technical analysis, it can be used for long-term also. It doesn't have to be used just for short-term. I say predominantly, but you can use a lot of the indicators for technicals for the short term. You can also use on the long term also. Then we got depends on the financial statements, the brokerage analysis, or the news reports. That's what the fundamental analysis is kind of based on outside factors. Well, I'm sorry, not outside factors, but things that can be influenced from the outside, like the company's financial statements, the brokerage analysis, and the news reports. Whereas technical analysis is basically just the stock price. That's all you really follow. Price action trading. That's what basically technical analysis is. You're following the price action. On that note, I'm gonna bring in my guest, Sanchez from the Unified Trading Institute. What's up, my man?
Hey, how's it going? How's it going? It's good to be here.
All right. Yeah, brother, man. So, tell us about yourself.
Hey guys, yeah, my name is Sanchez. Sanchez Richardson to be specific. You guys can definitely find me online, all social media presence as far as like Instagram and Facebook and YouTube's concerned. I got a long history there, just being on social media in general. Definitely been grabbing the bull by the horns with trading. No pun intended there. But yeah, I represent Unified Trading Institute. That's my own brand company that I've launched. Pretty much, we're an education platform where we teach purely technical analysis, and so that's why I really wanted to be here on the program with you guys, because that's what I feel is really one of our key points. You know what I mean? For a lot of the pro reasons, as you already mentioned, that you're able to use them in any kind of financial market. So it doesn't matter forex or stocks, because patterns, they just keep repeating themselves.
Yeah, it doesn't matter what market people. We want to emphasize that patterns, like we just said, they constantly repeat. All right, so Sanchez, like I gave him a couple examples of some fundamental analysis indicators. Why don't you go and give him a couple of the technical indicators?
Technical indicators, I mean, you definitely have some indicators with that as well. You have like the RSI, you have like MACD indicators, you have moving averages. And you actually have two different type of, you can even break it down even more than that. On a bigger level, you have what's called leading indicators, and then you have what's called a lagging indicators. So lagging means it's using a mathematical formula based on what's happening in the market, right? Based on the numbers of the open price, things like the open price, the closing price, the high, the low price, things of that nature. And in real time, it's performing a certain algebraic problem, arithmetic solving in real time to project some kind of image on your dashboard, your screen as you're investing. So whether it's a sloping line up, a crossover, something of that nature, it just gives you an aid or an assistance to your technical analysis trading.
Yeah, basically, a leading indicator is an indicator that it can help you make a buy or sell point before the data is presented. So it gives you kind of a head start, like leading. That's why it's called a leading indicator because it leads the data. Go ahead, Sin.
Yeah, that's for sure. So an example, yeah, good definition there. So an example of a leading indicator would be something like a trend line, for example. A trend line can go on forever, and it's not based on any particular. It's maybe based on the current price or the price that you're looking at, but the long-term um, reaction to price, that's not based on any kind of formula, such as a moving average or something of that nature. So, yep.
All right, give me a second, people. I was trying to find a trend line for you. Hey, so let me do the screen share real quick. Sanchez, give an example what he was saying about a trend
Yeah.
line. Here it is
Sure.
right
You
now.
got it. I got to plug my mouse in here. I was filming when we were setting up.
All right,
Ugh.
right. Here you go. See, basically, a trend line is basically it's either
There you
upward
go.
or
Nice.
downward.
Mm-hmm.
So, hey, can you explain this for them?
Yeah, for sure. So, like, you want to base it on two things. As far as what I teach in my academy is just technical analysis, purely based on things such as the leading indicators. So, you need 2 points. The more points, the better. And what I mean by points is like if you're drawing a line and you're connecting dots, that's as simple and as easy as investing can be. Really, you're connecting two dots. And what are those dots? You may ask. Well, it could be the price point in May of 2010, and then the next point can be May of 2012. And if it's in a diagonal line, you can kind of connect those dots. And what that does, you're connecting A to B, you're creating a line. And what you want to do is capture that move once it comes back to point C, which is again, I believe you can
As
actually
you
see one of
see,
those images.
it
You can
takes
see
quite a
there, yeah,
while,
it's
but it
it's
does
an
come back and touches
anticipation
it.
for when price comes back. Exactly. And so you use these tools in conjunction with other trend lines and things of that nature to make a better investment decision, because as we all know, you immediately have a 50-50 chance once you enter the market.
Sanchez, I'm sorry. I mean, I didn't know
I'm
if you
sorry about
stopped
that.
me. Keep
No,
going.
yeah, you go ahead. Yeah, no, you can go ahead.
No, I was just giving like a background in case they didn't know because I didn't know if some people understood the trend line. But yeah, so
Oh, did you hear my explanation, or should I go over it again?
no, I
Or
heard
you
it
want me?
again. But
I could definitely keep going.
yes, keep going.
Um, yeah, I mean, so and then you have a couple versions of it as well. Depending on how in depth you want to talk about it, how technical you want to get. You have a bearish trend line, and then you have a bullish trend line. These are the things that I talk about in my academy, and there's a difference between the two as well. So if you have a bullish trend line, That just simply means price is above that trend line. So you're connecting dots at the lows, which is called a bullish trend line. If you're connecting the highs in a descending format, you're connecting the highs in a downward motion. So that means price is rejecting this motion, which we call it a bearish trend line.
Now the thing with those, a bearish trend or a bullish trend, the terms, it gets kind of confusing because you're trying to you trying to see a price make higher lows or
Hmm.
lower highs. So it gets kind of
Yeah.
confusing. But
It
so you
does, but
basically,
once you look at it just as an image standpoint, it helps looking at just the image. Is it going up or is it going down? You know what I mean?
yeah,
We can definitely make it sound super complicated with all the jargon,
yeah,
but when it comes down
yeah,
to it, is the object on the screen going up or is it going down?
basically, and that's basically what it is in price action. Just watching the screen, making sure the price is going up, is going down. Because the best thing for most markets, except for stocks, stocks you really can't do this. I mean, you can, but like in
The
forex,
cycles are
futures,
different.
commodities, yeah, they're way different because it's way slower. It's less liquidity. That's a big word here on Trader people. Liquidity and diversification. Those are two big words. Explain why it's kind of slower in stocks as compared to those other markets that I named. Like why they have a cycle, they're different.
Yeah, the cycles are a little bit different. As you mentioned, the word volatility. We have a higher, I believe, a higher level of volatility in the forex market, and really, there's just different financial markets out there. Luckily, with technical analysis, you can excel in all of them. But I definitely feel, as a personal opinion, that investing in the stock market is more of the long term. Just because those price moves don't happen that often, while they do, it could be a random month, a random year, a random time, and of course we here try to limit the randomness, but and I've seen stocks range from two price levels for years and years, and I know that's a lot of jargon right there. So what I mean by range is, let's say the price of BP gasoline, right? Just the stock value of it is $100, and then it goes up to $120, and then it goes back down to $100, and then it goes back up to 120. This is what's called a pattern. This is called ranging. All right. And so that just means it's stuck in between 2 points. Now, the best you can do is make money in between those 2 points, but without it going up, 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 and without it going down, 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 down,
Yeah.
you're making less money because you're just trapped in that single movement. So in forex, while we do have those ranging moments, there's more money made in between those times.
Yes. As he said, the only good thing about a range trading environment when this range is like he said, it's easy to spot the entry exits because you already got the points. You already know it. Every time it touched this point, that support, it touched that point, it's
Hmm.
gonna resist. So that's like the best thing. The only, in my opinion, as he just said, in a range environment, is that it's easier to spot the entry exits. But a trend goes on, it keeps. It's like the Energizer Bunny keeps going and going and going and going and going.
Hmm.
Um, hey, can you give them some tips on how to spot a trend, like some indicators or some price action, some things that you can spot on the chart?
Yeah, I mean, I could definitely talk about that all day long. It's my thing. I love it. I love teaching it. I'm very passionate about it. You really, when it comes down to trading, and it is not that hard, especially technical analysis, because again, it's repetition, and then that's what I mean by it's not that hard. It's like as you continue seeing the same patterns over and over, you start to learn how to recognize them, and that's the whole key of it. You know what I'm saying? You want to recognize patterns, A, and then you want to take advantage of those patterns, B, and that's what comes down to, because these patterns, they not only happen in the financial market, they occur in all markets. And not necessarily all markets, but all things in the universe. You know what I'm saying? So if you look at a tornado from the sky, it has a spiral effect. If you look at the galaxy, it has a spiral effect. If you flush down the toilet, it has a spiral effect. So these natures that occur in just Mother Nature and the universe, you can apply them to the financial market. And I believe that's what separates my organization from a lot of others, because I make that connection.
Hey, you remember the golden rule? That's weird
Yeah,
that
that's
how the
exactly what
golden
I'm
rule
talking
applies.
about.
That was
Hmm.
wild. That was, yeah, that's weird. But yeah, people, so yeah, so And the thing with we want to stress between fundamentals and technicals that a technical trader, you really don't have to have a degree in finance or a degree in economics, or all you really just do like my man Sanchez and I'll constantly say is learn how to spot the continuous patterns. You learn to spot that from trading. So
Mhm.
once you trade, you're just gonna learn like, wow, if A plus B happens, C is gonna happen. If C and D happens, E is gonna happen, so on and so
Mhm.
forth. You'll start spotting those trends, those range environments, so you can see the predetermined highs and lows. Like, all right, Sanchez, hold on, let me get this screen share. This is from a book I wrote. It's called Price Action Trading.
Yeah, go ahead. Let me
I
see.
want you to oh man, okay, I'm out to man. I want you to talk about support and resistance, and I got the examples. Just give me a second. Now we can zoom in. All right, I'm about to screen share real quick. Give me a second. You're going to talk about support and resistance and how that's like the first. That is the first thing you learn in technical analysis. Well, Sanchez, what would you say would be the first thing you learn? I say it's support and resistance. What would you think? What's up, Corey?
Yeah, yeah. That
What
was
do
the
you think
first
is the
thing I
first thing you learn?
learned. Yeah,
Yeah,
the first
me
thing I
too.
learned.
Yeah, yeah. That's what I was
And
figuring.
you know
Like,
what? I mean, man, you can make it so complex and then you can make it so simple. But yeah, I
all
love
right,
support resistance.
Sanchez. So, all right, so we're going to talk about support first. So go ahead and explain to them about support, and I'm gonna use this as an example. So
All right, definitely. So I'm gonna explain it again, kind of like I explained it to my academy. Basically, when we're looking at this chart, you got two things. All right, you got your x-axis and you got your y-axis. So when I'm looking at the chart as a technical analysis trader, I'm looking at it from a mathematical standpoint of my x-axis and y-axis. We all take it back, and that's how deep I take it. Okay, so your x-axis, you got time. Your y-axis, you got price. Your x is on the bottom, your y is on the right. Okay, and so we're identifying support. So what does support mean? That means support. That means that when I say price, I mean the actual price of that item, that instrument that you're looking at. So if it's a Google stock and it's at 893, when I say the word price, that's what I'm referencing. Okay, I just want to make that clear definition. So if the price of any kind of instrument, let's say, continues to bounce off of $40, then that means $40 is acting as a level of support. Now let's
because
say,
just
what
think,
do I mean
people,
by keep
when you
bouncing?
support something, hold it up. I'm sorry, I didn't mean to cut you off,
Yeah,
but when you say
yeah, no,
support,
that last piece is just
hold it
keep
up.
bouncing. If it keeps bouncing off that $40 price level, let's say year after year, month after month, or even minute after minute, depending on what time level you're looking at, then that's acting as support because it just won't break down.
And as he said, the more times a support is tested, the stronger it gets. So
Yeah,
again,
that's
if
the
you
history. So yeah, history has memory. You're right. I like to use that a lot.
historical, yeah, it's historical pattern. So again, like just knowing basic support and resistance, you could like, as example here, this is the euro dollar. Like you could have just made that's a buy point. You know, once you touch a resistance, you go short. You know what? It actually broke through resistance, but it came back. You know what I mean? Then it broke back down to the support. And it was in the range, but it kind of, it was, these what you call false breakouts because it breaks out the range, but it didn't quite break out strong enough the range, and it came right back in the range.
Yeah, I call
So
that
that's one
fake
thing.
news.
Yeah, that's one thing you got to be careful about with range trading and support and resistance. That it may break the support or the resistance, but it doesn't completely break the next line, so it gets forced back down and into the trend. I mean, to the range zone it was in. That's a perfect example
Right,
of that actually.
right. Oh,
Yeah.
what that?
Go to the next page. Now candlesticks. Now, all right. Now these candlesticks basically talks about price. That's all it is. It's the Now this is the four most important price points on a candlestick. Well, this isn't any type of chart pattern, which is a bar chart. Give me some more pie charts. All I use is really candlesticks. I don't use any other charts.
Same here. I use candlestick.
Yeah, that's perfect for the technical trader. But yeah, basically the candlestick people's high, open, close, low. Those are the four most important price points that you want to really see with a candlestick. And that's what every market and industry. And
Hmm.
basically, like I say here, the candlesticks come in two colors depending on the software. And let me stop the screen share. I don't want to give you too much. There's either red and green or white and black, which corresponds is bull or I'm sorry, yeah, bullish or bearish, which is up or down. So you want to expound on some of the candlestick patterns that you might see, Corey? I mean, Sanchez.
Yeah. Man, that's my sweet thing is candlesticks. I love trading them. I love patterns. That's my baby. Um, there's a million different candlesticks out there, honestly. And, what we mean when we talk about patterns is we want to look for ones that uh, consistently occur. You know what I mean? So, and not necessarily, it doesn't end there. I don't want to get too advanced in the discussion, but the location of those candlestick patterns also makes a big detail too, makes a big point.
Yo,
But
I'm glad you brought that up. That is a great point because certain candlesticks, once you spot them, you can see a trend is ending. It's like, oh my god, a trend's ending. Certain. It's really easy to spot, or a trend's about to start when it's like a big gapping candlestick or with a big engulfing bar where it takes up the previous candlestick, like the whole body. Like it's certain. You're like, oh, okay, that's the trend's about to start. Oh, okay, well, the trend's about to end. I can sell here. Like again, we want to stress this out with the candlesticks. You don't. Well, with technicals in general, you don't need a degree. You don't need nothing. Use basic trading. That's how I learned actually through technicals. I actually learned my technicals first, and I came down to my fundamentals. I'm like, yeah, fundamentals is good, but I don't want to downplay fundamentals. If you're a long term investor and you're looking for the long run, and fundamentals is very important. It's very important. But if you like to trade markets with high liquidity, like forex or the futures or the commodities or things like that, I think fundamentals are kind of counterproductive in those markets. What do you
um,
think, Chaz?
yeah, it depends on your expertise, man. Honestly, some people prefer running it by the numbers. Like you can take fundamental um perspectives in all markets, just like you can take technical analysis perspectives. Like if we talk about fundamentals in forex, what is forex? Foreign exchange currency. So what is foreign exchange? That means the exchange between two countries. All right. So if exchange between two countries, then you can follow the fundamental news that are supporting those countries that are influencing those prices that they have. And so again, those reports though and those findings of interest rates and things and those other fundamental news, president changes and stuff like that, those happen far less and frequently in those forex markets. So that's why, what I'm saying, it's a different kind. It just depends on the kind of trader you are, the kind of position holder you are, and things of that nature. But definitely you want to get in a high paced and intraday kind of environment. I don't think you have a chance intrading fundamentally. It really comes down to technicals, but
Yeah,
I
it's
leave that up for
real
free
hard.
judgment and definitely rightful opinions. But mine is with technical analysis. And in a
Yeah,
hybrid though, you definitely don't downplay it. You want to know some
yeah.
information like if there was an oil tank shot down or something like that in fundamentals, you want to know about that technically.
Or like war, like things like that. Like but that's not really fundamental. That's like kind of a black swan, like or war or terrorist attack, things like that. You really can't predict that, but like fundamentals are great. Like I said, if you're looking for long term or you want to find value, that's what fundamentals are really great for. Like in stocks, see technical analysis. See, but all right, this is a great thing. I'm glad. So, are you familiar with the stochastic or the RSI, which is the overbought oversold indicator? Now,
Yes, sir.
that's like it helps you find value. So it's kind of similar to the stock market, where something's undervalued, overvalued, because it's like the same indicator, but it's not. But I mean, it's the same thing, but they're found in two. different
Yeah, I can
ways.
help you out with that. So with I can help you out with what you're saying. So basically, any kind of any financial instrument can be placed on a chart as long as it has those two things, those time and price. As long as you have a time and price, you can plot it out, and through the history of time, you'll see how price moved. And in those price movements, we're finding patterns. Hence why we're having a discussion, fundamental versus technical. Um, and so in those tools that you have, you're just using different tools, you know what I'm saying? So if you're looking at fundamentally, you're looking at calendar and reports. If you're looking at technicals, you're looking at tools like into stochastic RSI, trend lines, things like that. And so what you can do is you could take technical analysis tools and use them in stock in those stock markets. You can take a stochastic and use it on the Google stock. You can take the RSI and use it on BP stock.
Yeah,
As
and
long
it
as you
would give
have
you the
that chart, you can see that information
now
because it's
the
based
point I
on
was
data. It's
making
based on an equation.
was like the RSI and a fundamental. It's completely separate analysis, but they tell you the same thing, which is I thought was weird. Was like it gets like one is if it's over 80, it's overbought. If it's under 20, it's undersold, and that's like fundamental analysis where you're trying to find value in the stock. So basically, the point I'm sorry that was like a roundabout way to get to what I was saying. How even though like one is like based on mathematics, which is technical. One's kind of fundamentals is based on just reading. Like you just got to just follow the math. They both
Yeah,
come to they
but you
both
can see the
come to the
blending
same
point
conclusion.
though,
Yeah, they come to the same conclusion. They help you make a decision on purchasing a security. But
yeah,
like fundamentals is
and that's
better
what it
for like
comes
stocks
down
and
to is
bonds.
just
Yeah,
whatever can aid you in making that decision. That investing decision.
yeah, people. At the end of the day, like I always say, is two choices, so you got a 50% chance of success if you just blindfold.
But
Hey, you ever seen that video on the internet where they had like the apes against the traders and the apes out traded them? Like, there's a
no,
video. There's a video,
I
but
would
yeah,
laugh
but
at
so
that.
yeah, but
But
having
I do
like
want to
these
make a
technical,
disclaimer. I want to let people know that those indicators, they're not 100%. So if you got something underneath 20, it might be underneath 20 for 5 years, 5 minutes, 5 hours. You don't know. So you just that's just again as an aid. It's not a decision maker. It's just an
yeah,
assistance.
it helps increase the odds. As I always say, it helps the odds go from 50 to 60 to what have
Yeah,
you. That's
anything
what
to
these
help that odd.
Yeah, that's basically what it is. People, as Sanchez just say, is help you to assist. At the end of the day, there is no 100% foolproof way of trading, whether
That's
fundamental,
absolutely correct.
technical, day trade, long term, like investments. Oh, and I like all right. So I want to emphasize that whenever I say trading, me personally, I'm talking in the short term, like day trade, maybe a week at the
Hmm.
most, where I hold a position. Whereas when you're like an investor, that's like to me, that is like the long term, 6 months to a year or years in a position. So that's why I would say that's another reason why I say fundamental analysis is perfect for a long term investor because you're doing all kind of research for a long um term investment. Whereas when you technical trade, you really just stick to the price points. People, we cannot emphasize that enough. And like this was just an overview, because as I said when I first came on, I did a few podcasts about fundamental analysis. This was just like a like for my segue to my technical analysis. I just want to go give an overview real quick, like a backdrop of the fundamentals and lead into the technical. That's why I brought my man Sanchez on. All right, Sanchez, good brother. Hey, thank you for coming on tonight. And go ahead and tell them about yourself again.
Yeah, if you guys want to follow me more, my name's Sanchez. You can follow my company, Unified Trading Institute. We're on YouTube, Facebook, Instagram. We do a monthly subscription. If you want to learn how to read technical analysis, we charge $50 a month right now, super low price. It will be going up. And we offer no fluff, pure technical analysis. You know what I'm saying? We're here to offer that real deal education, no spill. And hopefully everybody, reach that ultimate goal of generational wealth and generational knowledge. So definitely contact me whenever you're available. And I really appreciate this platform here, Trade or Die. Hey, you the man.
Hey, All right, Sanchez, baby. Hey, I'm gonna talk to you a little bit later, all right, brother, man.
All right, take it easy.
All right, all right. So like, yeah, people, like my man Sanchez was saying, and I want to co-sign and emphasize, there's no 100% way of trading, but once you know your mindset and your risk appetite, you'll decide if you want to be a short-term trader or a long-term investor. And once you make that decision, you'll start to realize what style of analysis is better for you. Do you want to be a fundamental analyst, a fundamental guy, or I'm sorry, not a guy or girl. You want to be a fundamental trader or a fundamental investor or a technical trader. And once you make that decision, you'll just come to realize because they both spot patterns. Yeah, exactly, Corey. And the thing with that, man, there's so many technical indicators. Like there's so many. As we're gonna see in our next podcast, we're gonna talk about some of the indicators. I'm actually gonna bring Sanchez back on. We're gonna go in a little bit more in depth about the support and resistance, the candlesticks, the different type of candlesticks. I don't want to take up too much time because we're already 32 minutes in. So yeah, that's how I actually learned through experience. Like I just said, there's hundreds of indicators, and thing with indicators, people, if you put too many indicators on the chart, you'll eventually start getting across, like they'll start crossing each other. Like three of them will say sell, three of them will say buy, and you don't want to make a decision. As I always stress and emphasize, you want to keep it simple, stupid. Kiss, like I can't stress that enough when you trade. People sometimes make it more complicated than what it needs to be. I think when people just keep it real simple, break it down at the basics, you'll see that this trading stuff is in the heart. And that's where Trader Dot comes in. On that note, people, we're out tonight, Monday night, on Memorial Day. Remember this. Exactly, Corey. Too many indicators, you'll confuse yourself. Remember that. All right, yeah, we got a new format tonight. For the rest of the I just started school, blockchain development. So we're gonna do the new live streams Monday night, Thursday night, Friday night. Hey, I actually got a few books coming out. All this stuff is free. I'm not charging for these books. They're coming on my website in the coming weeks. I gotta make the website myself. I'm doing a lot of people. So yeah, everything on this website is free. I'm not charging anything. I don't. It's all free information. So yeah, man, I got a couple projects coming up in a couple weeks, people. So yeah, remember on that note, you can find me TRADEorDIE.LIFE, Facebook, TRADEorDIE.LIFE, YouTube, Twitter, Instagram, all that good stuff. It's TRADEorDIE. I'm a social media manager, so it takes me a while to put my stuff everywhere. So just be patient. Any questions? TRADEorDIE.LIFE at Gmail. I have no problem answering any questions. I try to get back really, really fast. So like the few people that did inbox me, I try to get back to them really quick. And on that, people, enjoy your Monday night, your Memorial Day barbecues. I'm a vet myself, so I actually can't barbecue with social distancing right here in Pennsylvania. On that note, you guys have a good night.